My name is Blair Portfolio, and today we're going to be talking about the OG high yield income funds back in 2022. There was only really two, which was TSLY and Oark. So we're going to be talking about those, and we're going to be seeing if they would have been a good investment since inception date. Like I said, these came back in 2022, and everyone was talking about it. I was talking about it as well. It was supposed to be the new innovation type thing. It's not your grandpa's investing. This is the new way to invest. But let's just say the people that didn't adapt, would they have made a good investment? Were they right long term? Were we just scared to jump out? You can see on the graph here, you lost 56%. You lost about $11 out of your NAV, which is insane. But someone corrected me in my last video and said, I'm not counting the dividends. And he's right about that. So in this video, I'm going to show a calculator. I'm going to use dividend channel to give a more accurate return, because though it's bad, it's not maybe as bad as it seems. So I do want to make sure that my videos are as accurate as possible, and I don't want to give you guys any false information. So you can see you're down 56.34%, which is insane, and that will be a margin call pretty much. But the thing is too, even when I do show you guys your total return, you have to remember you can't really use your dividends. So all this is like reinvesting all the dividends, etc. But I will give them some credit. They are up 9% in the past month. So Oark is supposed to be an index as well, which is crazy. I remember everyone was talking about that too. Oh, Oark is better because it's an index. Well, it didn't survive that well. So you guys can see Oark here, but let's just see the actual total return. So I wanted to compare it to Oark. It's underlining that that's tracking, and you guys can see here that Oark, the total return would have been 26%. Really? Total return 26%. That's hard to believe, but that's what dividends, I suppose. And the average total return is 9%. And then without dividends, your total return would have been, I'm going to go off the average total return. So your average total return would have been 3%, and your total return would have been 10%. And then you guys can see here how much money you would have lost. So, I mean, it is saying that without dividends reinvested, you still would have gained about $1,000. I don't see how, but that's what it's saying. You actually, without dividends reinvested, you would have made $11,000, because this goes off of if you invested $10,000. So I'm saying you would have been up by $1,000 and some change, and then if you would have reinvested the dividends, you'll be up about $2,000 and some change. But I guess you can say you got a return on it. So the people that were doing it, I guess you guys got a return on it, I suppose. But I think Oark is a trash index. I think that Kathy, what's her name? Kathy Wood? Kind of forgot her name, but I think that chick just doesn't know what she's doing. I might be getting Kathy Wood mixed up with someone else, but I remember her name being Kathy Wood. I don't really follow her that much. I remember people used to always bring Oark to me, and I'm like, I don't care about that stuff. I looked into it. I don't want to know her. I don't want to know anything about it. It's trash. But she would have given you a better return, a much bigger return than Oark. So was Oark a good investment? You got a return. I think so long as you get a return, it was a good investment. So I would say Oark was a good investment. Now, I'm not going to invest in Oark. I'm not going to say you guys should invest in Oark. And for my personal style of investing, I think Oark is trash. But you get it. If you get a return, it was a good investment. Even if it's 1%, 2%, that means it was a good investment. Now, how good is debatable. So let's move on to TSLY. TSLY is down a whopping 79%. You would have lost $31 on your NAV, and now the current share price is about $8.36, which is crazy. So TSLY, I bought a lot in TSLY as well. I remember I put like 50,000 and maybe about 48,000 in TSLY, and then I lost a bit of it, and I just sold it. I remember I held on for it for a long time, and I was just like, this is not going to recover. So I learned my lesson with that, but I always just thought it was just because it was a single stock fund and because it wasn't an index. But I should have known better after I saw Oark, but Oark was doing a little bit better. I think Oark is actually still doing better than TSLY because it is an index, but 79%, that's steep, but we aren't counting the dividends being reinvested. So again, this came out in 2022, and you guys can see in the past month it's also down, probably because Tesla's down. I haven't been keeping too much of track of Tesla. I just invest in Tesla through the S&P. I don't really invest in Tesla myself. I sold my shares a little bit ago, but I buy and sell my shares with Tesla a lot of the time, doing limit orders and limit buys and stuff like that. I can teach you guys how to do that, and maybe another video if you guys are interested in that, but that's pretty much the best way to play Tesla, if you don't mind paying taxes on it. But it's down 10% in the past month. You would have lost about $1 out of the NAV. And let's just see your total return on the investment. So obviously Tesla would have made a return since 2022. And you guys can see here with dividends reinvested, you would have made an extra $2,000. And without dividends reinvested, you would have made $461.51. But let's just see the actual return. So for Tesla, the total return would have been 20% with dividends reinvested. Wow, okay, so that's decent, I suppose. But remember, you can't use your dividends. So we're just going to go off the average. You would have made about a 7% return with dividends reinvested. And then the total return, wow, that's really bad. So without dividends reinvested, looking at a 4% return, and then the average total return is 1.76%, which is pretty crazy. And I mean, you still would have made a profit though. So even though you had to wait 2 years to make $400, you still would have made $400. That's what the calculator is saying. I just think you would have lost all your money personally, but I can't argue with math, right? Now, if you're on a margin account, that's a lot different. And if you're on a margin account, you would have got cooked. But we're not talking about margin. We're just talking about only, total return. And this would have been a good investment, I suppose. Even if it's 1% return, that would have been a good investment. So everyone that was holding on to Tesla, I guess you guys are making money. Not a lot, but you guys are making money. So I can't really call these trash investments, because so long as you get a return, that is a good investment. That is just my personal rule, because an investment is supposed to be a return on your investment, regardless of the margin of the investment, right? So the OGs, I guess they're decent. My personal opinion, like I said, is trash. But what do you guys think? Do you guys think it's a good investment? I'm very curious to know. I love you guys' comments. I'm trying to get back to all you guys' comments. And I'm going to start doing more videos like this, because it seems like you guys really like this type of videos. That's pretty much it for the video, guys. Remember, bears eat bulls eat, but pigs get slaughtered. If you're serious about growing your money, join my free Discord. I post weekly watch lists and break down exactly why the market is moving up or down. You'll always know what's happening and what I am watching for free. If you want to go even deeper, the VIP tiers unlocks everything I personally use to invest, dividend updates, live trade alerts, company earnings, and one-on-one portfolio help. VIP starts at just $5 a month. The link is in the description. Come level up.